Aloha everyone, Joshua Hayes at BigWaveTrading.com. The sell-off that I was warning you about at the beginning of last week, actually the weekend before, continued following Monday's session. The New York Stock Exchange, as you can see, pulled back 0.62%. The S&P 500 pulled back 0.40%. Good news is, for the bulls, volume was lower and below average. The NASDAQ pulled back 0.25%, once again below average volume, and lower than the session before, unless this data is wrong, and that's always a possibility. But the bottom line is the selling is proper. So far, it's good because the volume isn't huge on the selling. So we're pulling back as we should be pulling back now. It just took a couple of days to get it going. So everything for now on my end appears fine. You see the SPY, the Qs, the IWM. Now the IWM looks a little bit more suspect. And if you were around in the chat room in the morning, I stated the rut is lagging here. The Russell 2000 is lagging here. My positions were looking really good compared to that lagging, and it kind of looked like it was more along the line of the overall market, but that lag did infect the rest of the market with the poor seasonality, and we closed lower. Now the good news with that sell-off today is that the VIX jumped another 10% plus today, so we're getting near the 20 level, which has worked for good bottom bounces lately. But to me, we still don't have the right amount of fear. The put call ratio is still elevated around 1.00. I think it closed at 1.01, but it's not at the 1.2 that I look for a bounce or reversal, and the VIX isn't at the 20-30 handle yet that I start looking for reversal. But the jump in the VIX shows that there is at least a little bit of fear showing up in the market, but still nothing significant. Something also I want to show everybody, that indicates to me that there's still more of this to come. And remember, we still got the rest of August and September to go through, and seasonality doesn't technically start turning in October till second to third week of October, so there's still plenty of time. But what I wanted to really show you was this New York Stock Exchange advanced decline line. It's finally starting to roll over following the wedgie breakout along with the S&P 500, and now it's once again lagging or leading the index lower. So you can see here the line is about back to where those previous lows were, while the S&P 500 still has a little bit of ways to go. So at the very least, I would assume we're going to at least test these July lows, the 50-day moving average, before we can even bounce back. So with all that out of the way, today was actually a pretty orderly day overall. The only issue is that you can see out of the long positions, there's one missing, EHTH. Sadly, that thing gapped up and flew without me. So the deal is with all these, it's a perfect example because I happen to have an even 100 shares order for EHTH that did not get filled today. So now what we do, today's low day was 25.40, I believe. Hold on for a second. Let's see, EHTH, 25.40. Yeah, so that's so 25.40 is the low of the day. So now as each day goes on, I remove 10% of the position, and it has now 9 days to get filled at 25.40 before I lose it. So now I'm reducing my 100 shares to 90 shares. If it doesn't get filled tomorrow, that gets reduced to 80 shares, 70, 60, 50, 40, 30, 20, 10. And after 10 days, the trade's off the books. It's same right now. Band is still on the books, and I think that's now down to its 6th or 5th day. I think a week's almost gone by, and the DDE ad has not been filled either. So 10% gets reduced until it gets filled. Now getting to the stops, it was a pretty orderly day overall. Nothing extreme here that shocked me, but the profits and losses pretty much cancel themselves out today. EBF was a sell stop, FSP profit stop, sell stop, profit stop, profit stop, sell stop, profit stop, profit stop, sell stop, profit stop, sell stop, sell stop, sell stop, profit stop, sell stop, profit stop, sell stop, sell stop, profit stop, profit stop. So it was a pretty mixed bag, but nothing too serious. Getting to the end of day sell signals right before I want to do that, I actually wanted to mention there's been a couple of earnings misses after hours. that people that I know have been involved in. One's not too bad, HUYA. And then the other one is actually pretty bad, SWCH, a really, really nice guy that I really like conversing with on Twitter. Last week told me that he wanted to buy SWCH ahead of earnings, and I warned him. He's a new trader. Warned him, you never want to do this. You never want to do this. I reminded him, this is the worst earnings season I've ever seen, with volatility, gapping, and then the intraday post-earnings range on day one following the earnings. It keeps getting bad, but then it seemed to be getting a little bit better, because last year I had 4 quote quote max pain trades. This year I only had 1, and that was due to me traveling and not having enough time to do my proper full due diligence. Had I done that, PFMT, I still remember it, PFMT would not have happened here this day. My size would have been reduced in half, and I would have avoided a max pain, and that would have given me 0 max pain trades for the year, while last year I had 4. But think about that also. This is the most volatile earnings season ever. We've had a lot of stops triggered during this, a lot of posturing. I'm about at 35% cash as I'm raising my hedges. How many max pain trades have I suffered this earnings season? 0. How many times have I been on the wrong side of earnings this earnings season before the earnings announcement? 0. I've had 0 big misses. Guys, I hope that counts for something, because I see people everywhere doing what my friend unfortunately did, putting half of his account into SWCH ahead of earnings. It's now down 22% after hours. He wants to know what to do now, and it's always cut your losses. I would never be in this position, so I don't know what to do if I was him, but if I was, rule 1, cut losses, and it'll probably bounce back and rip higher, and he'll probably hate me for it, but that's the way it is. So with all that being said, now we get to the sell signals end of day. Just good warning that all the stops and everything that's been happening this earnings season, we've been managing it extremely well at bigwavetrading.com, and I can only assume we're going to continue to do that into the near, short, and long-term future. HLG, confirmation close below the 50-day moving average on above average volume in red bop. That is a 100% sell signal. I think it's like a 66% gain in the position. TGA closing at 306. That's 1 cent below the signal date's low day. That with the heavier volume, that is a final cut loss level. I was knocked out of all of TGA intraday. And TPIC, confirmation close below the 50-day moving average on above average volume, expanding red bop, with that close below the 8.8 low a day, finally triggering the 100% signal. NOG closing below these lows right here. That was my final cut loss level for the new long position. Was going to give it some room to work. Close below 311 and the 50-day moving average is a final sell signal. I was completely knocked out of NOG on that day right there, as you can clearly see with that tail. And then SUPV closing at 1010. I know it's above that low here. If this stock was above its 50 and 200 day moving average, this would not be a 100% sell signal, but it's closing at a new 52-week closing low on above average volume, with BOP going majorly negative. That's a 100% end of day sell signal. Also, LBY closed below its signal date's low a day, but it's still, overall chart structure is fine. Closed also above this low right here. So that's a 50% sell signal. CERC, confirmation close below the 50-day moving average, is a 50% sell signal, but this was the initial long entry, still up well over 100%. So the 200-day moving average, even with a further confirmation close, unless it has red BOP, would not be a full sell signal. ORN below the 20 on above average volume, that's a 50% sell signal. FSCT below the 50-day moving average on above average volume, that's a 50% sell signal. And I have 5 signals for Tuesday. 2 are hedges, 3 are new longs. Which will work, which won't, I don't know. But whatever does work, hopefully, and usually, it should make up for the ones that don't, and we'll have some tight stops on the ones that don't. So the most important positions are the hedges. I care about those more than anything. SQQQQ, 1% of my account capital, limit order 1233, cut loss 1181, confirmed via PSQ and QID. I'll probably be posting the PSQ chart as my reference chart, just to show you that whenever I saw this one reconfirming the QID to my SQQ signal. This confirmed that I definitely have to take SQQQ as a hedge for 1%. And then SRTY, you can see the above average volume, the heavier volume, the rounding of the price action. Definitely want to add to my hedge here, 23.23. And I think for now I have a cut loss here and then the final one here, but 21.70 definitely. That's my final cut loss for the SRTY hedge. And now for the new long signals, NRC, this comes from my CanSlim quality scan. It was also in my tertiary scan with that price and volume BOP surge. It would have been in my price volume BOP surge scan, but it's a pretty thin stock, so that's why it didn't make that scan. So normally it would be, 1.5%, so I'll treat it like that, 0.75%. If it was just my CanSlim, be 0.5%. So I just want to split the middle, 0.625% new long position in NRC. Limit order 38, CanSlim quality. First cut loss there, 37.45, then 36.75, then 36.45, 35.80, and 35.30. And yes, I'll be using all of them. And if you want to, you can too. NRC, CanSlim quality. Then AMRC, this one flagged in my perfect speculator scan. Love the uptrending chart. Love the candle over candle hammer pattern, above average volume, increasing green BOP. It is slightly extended from its 20-day moving average. It's also extended from its 50 and 200. So perfect speculator scan, checked it out because I don't have an initial in my CanSlim scan, which it should be, but it wasn't initially flagged in my CanSlim scan. Added the stock to it now. But it's a high quality CanSlim stock also. So 1.5% of my account capital. Got to split it in half since it's extended, 0.75%. Limit order 14.40. First cut loss for me, 13.65, then 13.25, then 13. I'm probably off here somewhere. I think maybe that's 13.65. I'm going off my notes. Yep, 13.65, 13.25. 13, and then my final cut loss 12.70. And then the last signal, kind of a riskier trade, but look at all the metals, gold and silver stocks that are selling off and breaking down hard today. And then you have this stock, TMQ. TMQ's from my perfect speculator scan, appears to completely be bucking the trend. It's right there at support. I want to get long 0.5% of my account capital because it's a sub $1 stock, perfect speculator scan, not because it's extended. It's not. It's right there at the 50 and 20, but it's sub $5 stock, so only 0.5% of my account capital. Limit order 184. First cut loss, only ones I want you to pay attention to, 179 and then 174. I might loosen it up just a bit more to give it a chance to work, but that definitely should be your final stop. All right, everyone, I'll see you in the chat room Tuesday morning. This market looks shaky short term, but overall intermediate term, the structure of the overall uptrend is higher. I assume we'll have more selling in the short term, but that's what we kind of want to see right now in August and September if we plan on having everything lined up as we move into October, November, December, January.